Hello, Market Wizards. It's 8:01 a.m. Chicago time on Thursday, the 11th of January, 2018. Thanks for joining me again for another Trader Bite, where we read it, plan it, execute it, manage it, and then the next day talk about it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning, allocating to risk. It's actually a mixed bag. The DAX is way down. The German DAX is down 73 points, 0.55, 0.56%. The dollar is getting a little bit of a beating on what turned out to be quote-unquote fake news. A Bloomberg report stating that some of the officials in the Chinese government are starting to consider moving away from buying U.S. treasuries. That caused a bit of a move, and that's been refuted by the Chinese government. The bonds are down 12 ticks. The euro is strong this morning, trading at 120.90, up 84 pips, and crude oil is stronger again, 63.86, up 27 cents, up 0.42, and gold. So that gives us a mixed bag, right? So we have the euro strong, gold is strong, British pound is strong. We also have higher prices in the U.S. indices. Treasuries are lower. So normally we'd associate the BP, the euro, and gold being strong as a move towards safety. And you know, the treasuries would be positive in that case as well, the Eurobond and so on. But the Eurobond, the 10-year, and the bonds are all lower, with the DAX being at the low end of the scale. So anyway, mixed bag, that's all I'm saying. So both we have crosswinds coming into today's session, so pay attention to that. As far as what could impact us today in terms of releases, well, we already had the initial claims this morning. We had PPI on the U.S. markets this morning as well. Market didn't respond much to those. We're looking for the monthly budget statement at 2 p.m. Eastern, 1 Central. And then we have Fed Speaker Dudley at 3:30 Eastern, 2:30 Central. We also have, for those who are trading the bonds, we have a 30-year bond offering for $12 billion today at 1 Eastern. So I'm not seeing high impact economic figures on the calendar, but the news flow, the key news flow, of course, for crypto heads is that I retweeted it yesterday when it came across that the South Korean government, the Minister of Finance, is proposing laws that would ban cryptocurrency trading. And what we saw is the crypto market responding, dropping, I think, about 10% or so as of the time I went to bed yesterday. So I haven't looked at those this morning. Looks like Bitcoin's trading at 13,738, so it's a little bit off. It's only down 21% from the 24-hour price. Remember, this market does not have a beginning and it doesn't have an end. It's just when you're looking at the percent change on crypto, it's a matter of how far back you want to compare to daily, weekly, whatever. That's it. So let's take a look at what we expected yesterday versus what we got. So enter the review session. Primary hypothesis or scenario or key trade of the day is look for a market that is likely to chop around a little bit at the open. Look for a drop, get long, look for the impulse back to 27.48 and to 27.48. Look for the market to tangle in the 27.48 area and battle its way to 27.52.50. That's what this scribbling is all about. Just a lot of chop, 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 and grind into the prior day's point of control. That's pretty much what happened. That was pretty much dead on. Here's what we saw. So let's walk through this. Remember, okay, just a quick walkthrough, a high-speed walkthrough. Remember, this is the scenario right here, right? Push down, look for a place to get long, and then look for a first resistance at 27.48, the prior day's low, and look for it to grind through that, battle its way through into the prior day's range. That's the scenario. So here we are, the prior day. It's 8:30 Central, 9:30 Eastern. You want to be paying attention to the bars as they form down here. That's where you should be looking. By the way, make sure you're running on 1080p for best clarity if you have the bandwidth. There's the opening swing low, 27.42.50. Remember, I predicted somewhere around 27.40 is the turn. There's the opening swing high at 27.46.75. Okay. And then it crosses through the mid, and then it puts in a higher low. So what we have here is an open auction. Right, so far we know it's an open auction. What does an open auction tell us from webinar 1 or 2 from my website? It tells us that both sides are active. It tells us to expect chop. It tells us that the higher time frame could be standing by, is probably not active yet, and we're likely to compress, consolidate, balance before the next leg. So we need to be patient here with an open auction. There it is, swinging again. And then finally, we broke the opening swing low to the downside. So we got below 42.50. So now we're looking to the sell side, looking weak, right? I'll show you how. I have a secret to share with you this morning. I'll show you how a poorly managed trade ended up working out yesterday, and it's probably going to bite me in the butt at some point in the future for having done that. But this is what happened here. The market starts to unravel to the downside. So we have a pretty big impulse, 8.5 points. I'm still a believer in the responsive, but it looks really, really awful at this point. So unable to manage to take out the opening swing high. We extend we push through the opening swing low, and we're extending down. Here's the first legit opportunity. 27.41.75 is the mid. See this line? It says mid right here, this blue line. That's the exact center point between the high and the low so far of the session. And it's a setup for me on an impulse down. Pull back to mid. Look for an entry. Look for a continuation. Your key target becomes wherever the mid, whatever low or high was made before the mid. That'll be your key target, 36.50 in this situation. Okay, remember, you don't want to fight this market to the short side much. Okay, higher low. So what this did is it pushed down on a high, on a big impulse, 8.5. That is I think a high 2 standard deviation rotation for the ES. And then what it did is it pulled right back to the mid of this particular move, which was also an impulse. Okay, so it didn't grind its way up. We just quickly moved up to 41.75, and then it pulled back. This is exactly 50% right here of the swing up. So caution. Okay. And I tweeted about this. Be careful, likely to grind its way up now. And there it is. It's starting to grind its way up. Cancels out the impulse down. And now we're looking for the IB stat, right? So we're looking for the IB stat at this point. The IB stat tells us what? Does anybody remember what the IB stat is? The IB stat is that the first hour's high or low is historically taken out on a large sample over 2,000 days. The IB high or low will be taken out 97 to 98% of the time by the end of that session's day. So 97% of the time we will breach, not just touch, but breach the IB high or low. These are the yellow lines. So we're looking for that. So if you're long, that's what you're shooting for. You're shooting for where? Our first key target, 27.48, the prior day's low. All right, the green line. All right, and then the extended target is the close, which happens to also be the point of control, the pink line. That's the extended target. So that's what we're shooting for on the long side. I'll show you what I did. See that? Touch of 27.48 to the tick. All right, so that's a breach. That's an attempt at the prior day's low. So at this point, if the market does not maintain the mid, then we're likely to go into chop into the close. But the IB high has been breached, so tick for the IB stat. That's done. And it might go sideways if it breaks the mid and starts to float in the middle. Okay, so that's what we're looking for. We're looking for continuation. There's the mid. Wow, look at that. So we have a mid perfectly executed here. We have a test of the prior day's low executed perfectly. And then a mid test executed perfectly right there. So longs are hoping and praying that this holds. And it makes another attempt at 46.75 and starts pushing through 48. Who's in control at this point? Who's in control of the auction? Any guesses? Unfortunately, with the lag, I can't wait for answers. You get dead space. The day time frame traders in control here. The day time frame traders respecting all of the intraday levels so far. And what that tells us is we're competing against other traders as opposed to relying on the higher time frame, which does not care about day time frame levels. There's the mid test. Push, boom, beautiful. Look at that, push by 2 ticks. So this is expected to continue higher. The grind is expected to continue higher, and there it goes, 49.75. And it just will continue to go higher and higher and higher until the close. So we're approaching, this is after lunch now. So now we get the 2 o'clock New York crowd coming back in. Okay, here's a test again of mid. There's a new mid. So the mid has already moved. We've tested the mid back here, back here. We've tested the high, as I said. You see those day time frame levels being respected here. Okay, so we're trading against short-term traders. Important to identify that. Here we're approaching the close. We've made our attempt into the prior day's profile. We missed our key target. The key extended target was 52.50, the point of control in the prior day's close. We missed it by 3 ticks. And we go sideways. Okay, and we hold our mid. There you go. That's the session. Okay, that's how you want to read the auction. This gives you, what did we have? We had context back here. We had pretty good context based on this market generated information. We had pretty good context of what was happening. Then we got a huge clue back here. Once it could not breach and push this IB lower, then we get away from the short side, start looking at neutral or long, and that's what happened. Here's what I did that was messed up. Show you. So let's scroll back. Remember the symbology here. I'll try to make this fast. I know these trader bites have been going very long. The symbology is dots. Red dots are offers, or maroon dots are offers. Blue dots are bids. Blue triangles are fills. Red triangles are fills long. Blue triangles are fills long, are selling fills. Red triangles are selling fills. Blue triangles are buying fills. So I saw what I saw early on. Like I said, it looks like we're pushing higher. We had a 4.25 point push and a pullback for a higher low right here. Right here, we had a higher low, right? After a pretty good push higher. So I was starting to jump on Hypo 1 early. Okay. And so I took that long right here. So there's the long. There's my theoretical average line starting to kick in, right? And I put in my offers. There are my orders for exits to get queued, and I puked them out right here. Okay, because I did not expect a breach of this higher low. And then it pushes higher past my entry. And what I do here is really, really poor. I take the same price long, but with about 1/8 size. Same price long with about 1/8 size. Then I add here with 1/4 size. And then I add here for a full unit. So this looks like averaging down, but because I reduce the size, what I'm doing is I'm managing the same size stop, the same size risk. But it got away a little bit here. I let it get away. It didn't get away. I let it get away a little bit here. And I added down here to bring my theoretical average down. That's the line. I want this line, if I'm long, I want this line below me at all times. If I'm short, I want this line above me at all times. And the market turns around, so we get to that low of 36.50. I see it battling. I won't zoom in here, but I see it battling and unable to push through down here. So I add on a pop. I put out an exit right there, and I start to basically manipulate, campaign around it so that I'm looking for a better and better average, right? So I exit some more right there. So now I'm getting a theoretical average that's a little bit better. The market comes back to my theoretical average. I tried to buy some more right here, but didn't get a fill. Just had an order that I canceled only for a few seconds. And then off to the races we go. We go back and I exit my initial entry right there. Okay, I exit that. I'm well queued. And then finally, now I can relax and manage the trade. This is my theoretical average dropping down to 36.50, which puts me at the low of day. So this market has to come back down to the low of day to take me out for this trade to be a scratcher. And then the rest of it is just getting ahead of the IB. The IB high is 46.75. I'm getting out at 46.25 right here. 2 ticks ahead of the IB. And the next key level is 48, the prior day's high. And I'm bailing at 47.75. Got filled and it went through by a tick. Then it falls back off. And then my average now is 27.0575. And I'm holding a runner looking for that 52.50, which just doesn't happen. It takes forever and ever and ever. And it just doesn't happen right here. So it just keeps going and going. And you'll see here my theoretical average, 27.0575, stays steady throughout the day. On and on and on and on and on. So I have an order out there. I have a long, and I'm managing it. And it just doesn't get anywhere. So that's how you take a crappy entry and you get on your knees, hope and dream, and it works out, which is a horrible execution. I anticipated the drop, but this was much bigger drop. 8.5 points is really impulsive, and I hung on there, and that is an error. Okay, that's an error. That's a poorly executed trade, even though it worked out. That's the sort of habit that gets you questioning your stops and questioning your plan mid-trade. Let's move on. So instead of showing you what works only, I'm showing you what happens, really. And that's shit happens. So last night's session, the overnight session, pretty good volume, 146,000. We're back into the norm of our volume P-shaped profile. The market's accepting value higher. We're above the mid. We're above the prior day's high. This is relatively bullish, and that's how we're setting up. So overall, the market tried to push lower, unable, found buyers again in the Asian session. Quiet European session. We're starting to climb up, and this looks like it is making a pivot and a pivot point and a push higher, all-time highs at 2760. So we got through that 5250 area. In fact, we opened at 50 quarter and just dipped below and put in a clear test and fail. See that volume tapering at the low, and the market's holding on to these higher prices. So again, shorts beware. Okay, watch your shorts. So as we push through, we've gone through the LVN at 48.75 yesterday. We are battling. We're battling this low volume node. See this low volume node right here, this cutoff point? So we are battling this part of the profile right there. And getting through this 47.75, 54.50. Sorry, I keep saying 47. I don't know why. Getting through the 54.50 will likely get us new all-time highs today. Okay, be cautious if you're short. So that's how things are shaping up this morning. Here's our extended profile. The point of control is shifted up. It's all positive. It's all positive looking from here. What am I expecting today? I'm expecting, we're opening right in the meat of Tuesday's profile. I'm expecting an open auction. I'm expecting a weak attempt lower down into 52. I'm expecting an impulse higher at some point with lower prices. As it explores lower prices, we're going to see what the quality is of this move down, right? So we're going to look at the heat map right here and look at how does it stack up as it moves lower. Let's reset this to the current. There we go. So you can see the bids stacking up right there, becoming brighter and brighter. I'm looking for that to be supported on the way down, right? Impulse up, consolidation, and then a push into 62.25. That'll be the key target, the measured move, and that'll give us about 10 points of range. That is hypo or scenario number 1, or the key trade of the day. I'm looking for an impulse higher. That's the mighty market pushing through, as it has done many times with a grind. So what we're looking for is the same thing as we had back here and back here and back there and there and there. So we look for it to grind, impulse, and then push, grind, and push. That's basically what we're looking for today. Okay. The opposite scenario, open auction, does push, consolidate, makes its extension, then gets down, and then consolidates in the middle, and we end up with a double distribution profile with new all-time highs. That'll be the secondary scenario. I'm way over my time, failing miserably at keeping these to 15 minutes. It's 25 minutes so far. Don't forget, today I've got a webinar at 4:30 Eastern, 4:30 Eastern with Futures.io. You can grab the link here or on my Twitter feed. You just scroll through and you'll find this graphic and the link to attend. If you can't attend, register anyway so that you can be notified when the video is available. Good luck, and I'll catch you tomorrow. Take care.